Hi, this is Lee Harris, co-founder of Trading Research Group, with a quick follow-up to our analysis of whether the CFTC versus My Forex Funds case presents a risk to futures trading evaluator prop firms. We produced this follow-up just after the news that Deel have changed their terms of service on the 12th of September 2023, with the result that the prop firms that were using Deel for funded trader and affiliate payouts are moving or reverting to alternate methods. If you don't know who Deel are, they're an online HR and payroll service who over the past year have been used pretty extensively in the funded trader program space. It made it easier for these companies to make payouts rather than using PayPal or ACH or bank wire transfers to funded traders. Now, what we saw yesterday on the 12th of September were various Twitter posts from Forex prop firms, even some of the futures firms, talking about suspension of payouts through Deel. In the futures funding space, the social media groups of a few firms had pretty active discussion, with people expressing concern about whether scheduled payments would land in light of this, and people were getting understandably quite concerned with the silence from the actual firms themselves. Now, we did see a post on the Top Step group from a support representative, and later in the day, Apex Trader Funding put out a statement on their group as well. It was also on their website, and there's a link here. Since this time, a lot of the discussion that was on social has disappeared from these groups. Now, let's be clear. We don't think that any company in the futures trader evaluation space is operating with any bad intent. We've got no interest in this space experiencing problems. Personally, I've used these programs, I've taken withdrawals, and we've got a lot of students and members within TRG who do get funded and take withdrawals as well. We've also had affiliate links with these firms, we've earned from referrals, but it's really hard now for us to do that in good faith. So within our community and social media channels, we're no longer promoting new offers from trading evaluators. Our view is that the CFTC versus My Forex Funds case turns the risk of not being paid out by an evaluator from a theoretical risk to a tangible risk. You're seeing a lot of affiliates though who are saying things like, this company is a good company, these are just problems at Deel, CFTC versus My Forex Funds doesn't apply because it's Forex and we trade futures, they're regulated. Now, this is not accurate. There aren't any problems at Deel. Also, when you trade futures in a live sim, this is absolutely not a regulated activity. So there's systemic risk to this whole space. Let's go through the risk and see what applies, and you really need to take this seriously. First up, the changes to Deel's terms of service. I think it's safe to assume that Deel's compliance and legal people have reviewed the details of the claims made by the CFTC against My Forex Funds. They've looked more closely at the prop firms that they've had as clients and have been operating with, and now Deel have concluded there are areas of these operations that are similar. Deel might be legally right or wrong in their decision, but they've taken a commercial position. Now, who do we think has got the bigger compliance and legal team, Deel or your futures funding evaluator prop firm of choice? Now let's think about what other financial services firms consider the business activities of their clients. Obviously banks, but also credit card processing. Yesterday, Deel added these restricted activities to their terms of service, and the wording is activities that support pyramid or Ponzi schemes, and Ponzi is a word used within the CFTC case, matrix programs or other get-rich-quick schemes. Now let's look at Stripe's terms of service. If you don't know who Stripe are, they're one of the major credit card processing companies used by a lot of online businesses to receive card payments. In Stripe's list of restricted businesses and activities, they include products and services that are unfair, predatory or deceptive, including pyramid schemes and get-rich-quick schemes, including sites that promise fast and easy money. Fast and easy money. Look at this email which I got yesterday from one of the futures funding trading evaluators. Last chance to be a millionaire. So let's start to connect these things up. What happens if a credit card processing company like Stripe makes a similar decision to that made by Deel and decides it no longer wants to have a futures prop firm as one of its clients? Then the prop firm has got to find another way of taking card payments. What if all of the card processing firms decline this sector, all the prop firms, yeah? It starts to become really hard as a prop firm to get income in. Now, I can already hear people saying, yeah, but there's no problem, they'll move to crypto for payouts and you can pay them in crypto. Okay, but Weren't you arguing a little bit earlier that, futures are different to Forex? They're regulated, it's not shady. Okay, it's so not shady that the only way to move money in and out of the space could be through crypto. Okay, Now, if income falls into a prop firm, this can be a really big problem. Unlike my Forex funds, who are fraudulently saying that funded traders are placed into the live market, the futures prop space is very clear, commendably clear, that you start off in sim and that the evaluators might copy your trades into the live market. So why do they start you off in sim and why might they end up copying your trades? Well, a winning trade in sim is a cost to the business. These trades have got to be paid for, pay out to you, either by copying the trade into the live market, and it might be the individual trade or the whole aggregated position of all funded traders, or the funding for your winning trades is coming from the fees paid for evaluations and funded accounts. If the income from evaluation and funded accounts drops, then there's less money with which to do this. So why not just copy all funded traders into the live market? Well, then the evaluator's risking real money on a trader who is potentially inconsistent. They lose. Yeah? It's going to cost them more money than keeping them in live sim initially. And the kind of deep discount scenario we've got within this sector now and one-time funded fees, this business model just might not support the costs of putting all funded traders into the live market. So here's how the dots start to join and how you can see implications over maybe the medium term for what happened with Deel yesterday. This isn't a problem with Deel. This is an assessment on this industry space. Deel have joined the dots from the CFTC versus MyForex Funds case to the futures evaluators, and Deel have reached their conclusion, which is that the nature of the activities support pyramid Ponzi schemes or other get-rich-quick schemes. This is the same conclusion that the CFTC have drawn. It's not only the misleading statements from MyForex Funds, it's the entire business model of putting funded traders into live sim. Now, aside from being viewed as akin to a Ponzi scheme, as far as the CFTC are concerned, paying people for their trades in live sim and imposing commission on these trades is conducting off-exchange retail commodity transactions. Now, that's something that's open to debate, and the CFTC versus MyForex Funds outcome is certainly going to make this interpretation clearer. But here's where there is another piece of systemic risk, and that's the sim environments within which live sim operates. Now, for futures evaluations, these are mainly provided by Rhythmic and Tradeovate. Tradeovate, owned by NinjaTrader, is a CFTC-regulated brokerage. In the same way that Deel have looked at the CFTC claims and compared them to the futures prop operations, Rhythmic and Tradeovate likely are going to do that. And for sure, if CFTC come and start talking to them, they're really going to look at it closely, aren't they? So, what happens if Rhythmic and or Tradeovate reach the conclusion that using live sim for funded traders is a violation? Either the evaluators are going to be forced to put all funded traders into cash accounts, which we understand has got a big financial change to the business model, or the sim providers are just going to say, you know what, this breaches our commercial terms, no more infrastructure for you. So then how do you operate? Now, I want to reiterate once again, I don't believe that any futures trading evaluator has gone into business with any bad intent, but the CFTC case against MyForex Funds has moved us over the past week from a place of theoretical risk to tangible risk. Now, as traders, the most important job we have is to manage risk. We've got to act quickly when we see that our trade idea is moving against us. We've got to get out, we've got to reevaluate. You know it's bad to move your stop loss when you're trading or have it set too wide. Now for me, after I read the detail of the CFTC claims against MyForex Funds, I took action really quickly and I got out of all my funded accounts. Right now, I'm only trading my cash account until this situation becomes totally clear. What I see online, on social and whatever else, is a lot of people acting with hope. These are problems at Deel. They can move to crypto for payments. Company XYZ is a good company. It's futures, it's not Forex, it doesn't matter. Now, this view can come from denial, ignorance. You might be an affiliate with a vested interest of affiliate income, or just hope. But wherever it comes from, if you're not assessing the facts of the situation right now, you're moving your stop loss. The futures prop space has been really, really great for getting a highly geared return on your spend if you get funded. it's been plausible to turn $200 into access to say 2.5k of drawdown that you can realistically use to generate 2 to 4k of withdrawals each month after a while. Now, while the opportunity to do this still exists at all these firms, in my view, it's riskier than it was, which is why for now I'm trading cash. You've got to do your due diligence and you've got to manage your risk. I would love to hear from any of the principals of the futures trading evaluation firms to discuss why I might be overreacting. I'd be more than happy to run a live interview and we can go, we can do a deep dive into live sim versus what the CFTC is saying. If I can be convinced that I'm overreacting, or if I can be contractually guaranteed that any profits that I make in a funded account will be available for me to withdraw, irrespective of changes to the regulatory environment, the business operation, or CFTC enforcement, then I am straight back into using evaluations and recommending them to our students and members at Trading Research Group. Earlier this year, I had over 50 funded accounts. So if you run a futures funding firm and you take exception to the dots which I'm joining, please do get in touch and we'll be delighted to set this up. I want to be reassured with a counterpoint to what I've read in the CFTC versus my Forex Funds case and my interpretation of the legislation. So with that, guys, over to you. Meanwhile, everyone else, good trading and manage your risk everywhere. Bye for now.